Everybody doing? My name is Joshua, and we're taking a look at this trading series that we're doing where we deposit $1,500 and we're trying to make it back to break even into an account that I lost a couple of years back when I was a novice trader. And this series is called From Novice to Pro Trader. And yesterday we placed short on the Euro USD at right here at 1.2122, and we expected price to come down, maybe a little bit optimistic, 1.2090, but in reality we were waiting for price to come down here at 1.2100, and it actually hit our price target. But unfortunately, this stuff happens when you trade. This move up and then this move down when we were in the money happened at 4 in the morning when I was sleeping. And this is what trading is about. Trading is this. These are the things that are going to happen in trading, where you are in the money while you're sleeping. And this was at the beginning of London session. And then when you wake up in the morning session, you're negative in your account. And this could happen easily. And it happens to a lot of traders. That's why it's important to put stop losses. It's important to put take profits, and et cetera. But what we've been looking at the markets now that I've been looking at it, there is a trend that is developing right here. Let's create this trend line from this low down here at 1.19, and we see that it's respecting this trend line. We could draw it like that, and that's a wedge going up. And basically what we see here is this was a low, right? So price went up to here and went low, but instead of going lower over here, what price did was that instead of going down here, price respected this trend, went up, made a higher high, a higher low, a higher high, a higher low, and a higher high. But as we see, the wedge is exhausting, and what I believe is that there's a lot of things going on. For example, the amount of pips that happened during this week on Monday. So let's take a look back at Monday real quick, and each candle right now represents a day. Let's clear this trend. You see how during the day this doesn't even look like a trend, but when you jump into the hour, there is. So today's Thursday, Wednesday, Tuesday, Monday, and then Friday. So Friday went up. Monday it tried to go up, it went back down. It respected this level at 1.19, and then we just had 3 days of price just going up. But now price went to its highest point, where we see price right here at touching this area right there, touching 1.2175, and at 1.25 having this big rejection. So it hit the wall. It had a big rejection of about 26 pips from here to here, 26 pips rejection. And now the market is basically showing us that it doesn't know what it's doing. This right here, this position was 100% probably not bears. I don't think that bears are in the market right now. If they're bears in the market, they're struggling. They're fighting against the bulls, or they've already jumped out of the position. This move right here is traders taking profit. And when we talk about traders, let's talk about institutional professional traders. It's Thursday. Tomorrow is non-farm payroll. Friday. They want to show in their books that they made money. So if they're trading right here, if they jumped in around here, let's say, you see, nobody really catches the low of the day, but let's say they jumped in right here in the middle, and they knew that price was going to go up because of market sentiment. They knew that all retailers were short, so they're going to go long. They're going to go long with the big bucks. This big move right here, this is the banks moving in. And the banks did one day where they made 132 pips, let's say from that moment, from this line right here, 132 pips. From this line right here to here, 133 pips. That's one day. The next day, they take price, right? They take profit, and they jump in again. Let's say they jump in from this line, right? They take profit, and that's what this wick shows us, that traders, they went up, it went down, they were taking profits. And let's say they take from this, from here, from that price, let's measure it, all the way to the end of day. That's 60 pips. So now we have 200 pips that they've been moving. And now we entered the third day, Thursday, and they took profit from this position. And let's say they took, again, they rode it all the way because they knew retail is still short. That's another 50 pips. So basically, it's gone up 250 pips in 3 days, and it hit the target on Thursday. And there are people in Wall Street, institutional bankers right now that are extremely happy. They made money this week, and they don't want to lose that money. So tomorrow is non-farm payroll. What do you do if you're a professional trader? If you're an institutional trader, you're out. You take your money and you just relax until Monday. There's absolutely no need to trade non-farm payroll tomorrow if you made 250 pips during the week. Now, I didn't jump into this because I deposited my money on Wednesday. So I knew this was going up because of market sentiment. I've been trading for 12 years, and I know that when you take a look at market sentiment, right, when it's above 70%, when it's above 65%, right, to 70% of traders going one way, big banks and institution is going to go the other way. So 71% is short. What's smart money going to do? Smart money is going to go the opposite way. Smart money is going to go long. If 71% is long, what is smart money going to do? Smart money is going to go short. So smart money is always going to do the opposite of what the major the major idea is, where everybody is going. And this usually 100% works for the dollar. So you could trade any pair using sentiment with dollar. When it comes to other currencies, the sentiment is this strategy of sentiment is really not that valid. So let's take a look. Right now, it's still 71%, but it gets a little bit tricky because traders already got their target on Wednesday. They already hit their target on Wednesday. And basically what is happening is this is definitely 100% smart money taking their money, taking profit, institutional banks, mutual funds, professional traders taking their money for the week, and price will 100% reverse. If we were going into a regular Friday, which Fridays are very crazy, it's Freaky Friday. Usually on Fridays, nothing's respected. Trends and normal things that the market is supposed to do, it doesn't really do on Fridays. And Fridays, traders stop trading around 10:30, 10 o'clock, 10:30, 11 o'clock, But tomorrow is non-farm payroll, the big kahuna, the biggest event in the market, in all markets, especially in the Forex world. And we will see volatility tomorrow, especially since it's the end of the year. It's December, so traders are more risky. They want to close out the year with good numbers, so that they could show their clients, so they could show their portfolio, so they could show their stockholders, their investors, that they made money. So they're willing to risk a little bit more. They're willing to put in more money into the pot, which means that there's going to be more volatility, more movement, and basically we could see a big movement tomorrow. Thursday, we could see movement, trades going probably 50, 200, 100 pips, depending on what the setup of traders are going to do today. So from trading, a couple of years, I've learned something when it comes to non-farm payroll. As we can see right here, there's a trend developing, and the trend has been respected. Last night I was a little bit tired, so I didn't really look at it. So this is definitely 100% what happens during trading. If you don't study, if you don't look, if you're not alert, if you're not in the now, if you're not seeing everything, and you just place a trade to go in, you're gonna lose money. You're gonna lose money real quick, because from a loss to a loss to a loss to a loss, it adds up. Increment adds up. So right now we see this wedge being built, right? This little triangle wedge being built, and we see a low coming in, right? And higher high, low, higher high, low, and we saw it hit this wall right here, this resistance. So we're going into a resistance here, right here, and we're going into a resistant area here, and we'll probably be around 1, 2, 3, 4, 5, 6 o'clock, 7 o'clock. We'll probably figure out exactly what traders are gonna do, right? It could break down and come down here, right, and just retest and then come all the way down for non-farm payrolls, where just everybody's just taking their money and leaving. Or we could see something different, right? We could see this secret that I've noticed throughout the years of trading non-farm payroll. Depending on what happens tomorrow, depending on what happens tonight is what you'll see tomorrow. So usually banks and institutions and smart money, what they do is that they position themselves right now. They position themselves for right now for tomorrow non-farm payroll. And if you see price just, do this, just consolidate, doing higher highs, higher lows. By 8 o'clock, non-farm payroll, you'll see a stagnate, right? Nothing. And then at 8:30, you'll just see price just shoot up. And price could shoot up, all the way up. If you see that higher high, higher low, higher high, higher low, then boom, it'll just shoot up, because they're positioning themselves for that move. Now, if you see price do the opposite, where you see price just, let's just delete this. Let's delete this. If you see price begin to just go like make a lower low, then make another low, a short high, a lower low, and it respects this, where it doesn't break through this price right here, it could retest, and at 9 o'clock it could do a slingshot where it could go here and then down here and then again all the way down, depending on what the market's going to do. But right now we're heading into a time of the year where traders want to take money, so you could see positions being just taking off the market, probably, let's say mid December. You'll start seeing less money, and in January you'll see a lot of traders not trade. So we're in this trade right now of we're down $160, and what I'm gonna do is right here we're at break even. I'm sorry, let's move this out the way. Actually, it's the other way around. Let's just move this real quick. And this is for a long position. We're here for a short position. We have our loss right here. It passed it, but we didn't have a stop loss. I'm thinking about either exiting if this comes down again, where traders are taking profit for the day, breaking even, taking a small loss, or taking a small gain and not trading into non-farm payroll tomorrow. Depending on what the market does tonight, I'll reposition myself. But definitely we're in a huge risk, and this could happen to you as a trader. This happens almost all the time, where you have to start making decisions. You're at $158 negative at tomorrow's non-farm payrolls. There's a lot of volatility. Things could happen tomorrow that could take you out completely. You could, if you leave this position and you wake up, you could be negative 500, negative 600, and then boom, you've already lost half of your account. Or you could just take the small loss, not trade tomorrow, and see what happens. And definitely on Monday, market will be short on Monday. And if not Monday, then Tuesday it'll have the Tuesday reversal. That's what we talk about in the Forex world. Tuesdays usually Tuesday reversal. Fridays is Freaky Fridays, and when you reach your target on Wednesday, Thursdays it's another reversal day. So this is our plan. Going in for tomorrow, we're gonna fight for our trade. We're gonna protect our trade and probably take a loss, probably take a $40 loss, a $20 loss, or whatever it is, whatever we find right. Especially if during the hours we see this trend not being respected and price coming down, we'll definitely 100% close the trade, and I'll keep you updated on what we're doing in this crazy journey of taking novice traders to pro traders, where I deposited $1,500 into an account to teach you how to trade, to show you what happens when you trade, not just selling you a course, but actually showing you how you could trade and what happens, the goods, the ups, the downs, the ugly, the good, the bad, the ugly that happens in the trading world. So I hope you have a great day. Like, subscribe, and I'll see you in the next video.